What's up, guys? Welcome back. Thanks so much for tuning in. I'm going to be talking about some pretty exciting stuff in this video. And like always, the topics I talk about are pretty complex, so you can't get the full picture in one short little 10 or 20 minute video. So please subscribe to the channel, check back through some of my previous videos, and hit like on the video. It helps it get out there and more people to see this stuff. So with that being said, I'm going to get right into it. I'm going to talk a little bit more about Canadian real estate. People seem to be pretty interested in what's going on. I've been talking about this for quite some time. A lot of people are starting to jump on the bandwagon, but I've been warning people of this crash for quite a long time. I still think it's coming. And if you saw my last video, I did just buy raw land. And in that video, I explained why I think that's a good idea, even though we could be at the peak of a real estate bubble at this current moment. And if you go back to my very first video, I made that video over a year ago, and it's very relevant today. I go over a lot of the charts and some of the more technical reasons why I think we are at the peak of a real estate bubble and why I think we're going to see some major deflation in the real estate market. And I go over a lot of charts with you and just outlining a lot of the data that I use. I'm not just making this stuff up. I don't just use my own opinion. Of course, it is just an opinion in the end, but I analyze a lot of data, and that's how I'm bringing you guys this information. I don't just pull it out of my ass. So I actually have taken a lot of my own time and done my own research, and that's how I'm coming up with these opinions. So even though they are just an opinion, it's still, I've formed this opinion with hours of research, and I'm sharing that with you for no cost. I'm just making these videos because I actually care about fellow Canadians, and I want people to be aware of the trends in the market and what's going on so that you guys can make the best decision, so that you can protect your own wealth and protect your family and friends. So with that being said, I'm just going to talk a little bit more about what's going on in the real estate. We have a lot of different things that are coming into play here. Basically, the main reason I started talking about this was just because of the high levels of money printing going on in Canada and the fact that they were getting this money into circulation by issuing large mortgages to Canadians. So they print the money out of thin air, the Central Bank of Canada does, and then they essentially put it in, they get it into circulation by issuing loans to Canadians. So that's how they get this phony money that they're counterfeiting out of thin air into circulation. And once they get people to sign up for all this debt and they have us all believing that real estate only goes up and you can't lose and you're only going to make money, everyone thinks, hey, that sounds great to me, sign me up, where do I sign? So they sign on the dotted line, and they probably don't know that much about mortgages and what that means and the big picture of the economy and all about the cycles that we see in the economy, interest rates, how they manipulate stuff, money printing, all that. So all of this stuff comes into play when we're looking at potential directions that the market might head. So some of the stuff I'm looking at are the overextended borrowers. Basically, Canada has one of the largest, if not the largest, amount of debt per earning ratio in the world. Actually, I think we're maybe second or something, but we have just astronomical amounts of debt out, and all our eggs are in one basket. Pretty much everyone's all in on real estate. And that was essentially pushed up by these foreign investors. So we had a ton of foreign money that came in the last 10 years. Just to name one other country, we had a lot of Chinese money that came into the country and started buying up Canadian real estate because communist China, they know what's going on, and the government comes and tries to take all their wealth and that. So all the rich people look to get their money out of the country, and Canada was a safe haven where essentially they were allowed to come in and buy up real estate with numbered corporations. So that meant the government didn't know who the actual purchaser of that real estate was. So we could have drug money, all kinds of dirty money, corrupt corporations, corrupt whatever, families coming in, buying up this real estate, and they didn't have any requirements to disclose who they were or that. So we essentially don't know who we sold all our real estate to. That's a scary thing if you ask me. And that was the main driving factor in this huge price gain in the last while. I shouldn't say the main factor, but it was definitely one of the key factors. The other key factor was the amount of money printing by the Bank of Canada. So if you outline that chart, if you look at the money supply chart, then you compare that to the average price of real estate, you'll see that those two charts rise at the exact same time, and they pretty much follow each other. They're directly correlated. So you can see that this is what happens. They print this money out of thin air, they put it in the form, they put it out in the form of debt, people borrow it and they buy houses. And so that's what's been happening. Then we had the foreign money come in, they were laundering money, all this stuff. It was pushing prices up. The government was happy because they get to claim that these houses are worth so much money and they get to tax you more. The consumer is happy because they're told that their house is worth so much, so they think their net worth is worth so much. And it's all just kind of this fantasy world, and no one really knows the worth of their home until they go to sell it. And it's an interesting situation right now because all of the foreign buyers have dried up. I think a lot of the reason is because of COVID, and they've kind of limited the amount of people they're allowing into the country, and also we have other economies like China where they started to contract. So they were going through a huge boom and they were making all kinds of money and printing money and devaluing their currency. And so there was a ton of money out there, and they came and they bought up real estate in a whole bunch of other countries. Well, now their government's starting to raise rates. Their economy starting to contract. So they need to come up with the funds to cover a lot of that debt that they borrowed at record low interest rates. And now with rates going up, they need to sell off these assets. So we're starting to see some downward pressure in the more overinflated markets like Toronto and Vancouver. I know Vancouver still had a very busy season. However, I believe the average time on the market is up and things aren't selling as quick. And that, I think prices are still up. We're still seeing a lot of people kind of shifting around. But the true teller is going to be January, because this October, is it October? It is next month, I believe, possibly October. We have 500,000 Canadian mortgage deferrals that have reached their maximum deferral period. So that means they can no longer defer these mortgages. And that is a lot. That's 500,000 mortgages that are coming due, and essentially they have no more option to defer that. And if these guys don't have jobs, if they haven't managed to get back on their feet by then, that means they're going to be, if they're smart anyways, they're going to be liquidating their homes. And that will be, in my opinion, the start of the downward pressure on these overinflated markets. So that is something I'm keeping my eye on. So we have those mortgages coming due, but then it's officially 3 months of non-payment to have an official mortgage delinquency. So we won't see those numbers coming out until early next year. And I think that's when this thing will really start to turn, especially if we have another major lockdown in the Canadian economy where they force a lot of businesses to close and don't allow them to operate at all or at full capacity. Well, then how do people afford these highly overinflated mortgages? So one of the ways they were affording it is everyone started to Airbnb, and they did the math, and that's how they were able to afford these astronomical debt loads. And it was working out fine until basically the economy shut down. We had the black swan, and all of a sudden people don't have that option. Well, now we're seeing a lot of those Airbnbs come on as long-term rentals, but at the same time they want these high rents for them, and very little people are in Canada. Very few people are actually thriving that much where they can afford these high rents. Some people are still affording them, but I don't think they're going to be able to afford them for very long with these debt loads and this black swan event in the economy and in our country and in the world. So basically, we had the perfect scenario for real estate over the last 10 years. We had record low interest rates, we had perfect job numbers, very low unemployment, and everything was booming, and we had a ton of foreign money coming in and all that. It was the perfect storm for real estate to go through this just wild bull run. And now essentially a lot of that has come to an end. The banks are tightening. We have another major cycle that I like to point out is the demographic cycle of the boomers all looking to enter retirement. So they are the main holders of real estate, the main demographic holding real estate in Canada. And a lot of them have multiple residents that they hold as investment. And I believe that we will see a large portion, or definitely a portion of these boomers start to liquidate their holdings as they look to enter retirement and look to kind of sell off their assets to afford the rising cost of living and to afford retirement, essentially. So that's one cycle. And the other thing, if you think about it, if you're entering retirement, do you want to live in a little condo in Vancouver and be paying like $1 million for that and be beamed with Wi-Fi all around you and everyone's sick and got COVID and everyone's turning to crime and drugs and society's falling apart and there's nowhere to go? You can't even have a garden or hunt or fish or, you know, do you want that? Is that the way you want to retire? Probably not. I don't know. Some people might be into that. But I think we are going to see a large number of these boomers sell off their real estate. Definitely, if it's their primary residence, they're going to be selling these in the cities and looking to move out into more relaxed areas where there's less people. They can get a little more land and just get a little more for their dollar. So that's a huge trend that we're going to be seeing over the next 10 years. And that's where I see a lot of downward pressure, because these people are going to start selling in the cities, and fewer people want to live in the cities right now. I know I don't. I was thinking about living in a city and now I don't want to live there. Why would I? I mean, you're just backed into a corner there. And I'd rather have a little more space, pay less money, and have a few more getaway routes if it really comes down to it. I don't want to be living on the 20th floor of some condo and, you know, it's just not very appealing. So I think we're having that cycle kind of come to an end where people are wanting to get out of the cities now, and there's I know out here, I've been talking to real estate agents. A lot of the way I gather my info, as well as I talk to people in the industry and I talk to people, just general people in public, and see what their thoughts are, see what everyone else is saying. And the big trend right now is everyone is buying raw land up here. It's getting snatched up. It's 10x the amount of sales they're having on raw land and farmland up here. So it's wild. We're already seeing the mass exodus out of the cities. And I think that's the smart people that are kind of ahead of the curve. And we're not even a year into this thing yet, and we're already seeing that. Imagine another intense lockdown. Who wants to be locked down in a little 300 square foot condo in Vancouver where the cost of living is just through the roof and you can't even grow your own food? No one. You know, you're totally at the mercy of inflation there. You have very little options. You can't have a garden, you can't hunt, you can't get away. You're just stuck in this. And you see what happened in China, communist China, where they locked them down. You weren't even allowed to leave your little condo, and they were there for months. I saw the horrific YouTube videos of them screaming on the balcony, like thousands of people just screaming. You could tell they were absolutely losing their mind. So for me personally, if I get locked down again, do I want to be in the city or do I want to be out on some acreage? And I know for me, I was blessed enough to be out on, I think it was like 12 acres or something when the lockdown happened. We had all kinds of equipment, and, you know, it was actually fun. I had a big shop. So I did some projects and I worked around there, and I really didn't even notice the lockdown. I actually enjoyed it. It was just an excuse to work on a project in the shop and all that. So that's just a trend, something to think about. More and more people are going to wake up to that. No one's going to want to be locked up in these tiny little apartments. So I think that is something that's going to continue to grow moving forward. And that's why I bought raw land out this way. I know it's a lot quieter. I've been talking to people that live in Vancouver, and everyone's thinking the same thing. They're thinking sell in the next, year or two and retire in the Okanagan because it's so beautiful here. And now everyone's been waiting their whole life. And now if we see a downturn in real estate prices, it could create absolute panic where people, the backsides of bubbles are the worst. it takes ages. Take the staircase up and the elevator down. So we saw that in the market crash back in March, and we'll see that in real estate. You'll hit the peak and kind of hesitate, people aren't too sure, and then when prices start to come down, they can come down extremely quick. I'm not saying this is going to happen for sure, but if it does, it could happen very quick, because we could have the Chinese trying to pull their money out, we could have all the boomers looking to sell, to move, and essentially there's also the thing going on with renters, where renters have just wild rights at the moment, and landlords don't even want to rent out their places because essentially the tenants have so many rights that it's hard to get them out. They can just stay in there if they don't pay rent. There's all these things where landlords don't want the hassle of renting it out. So again, it's just another factor coming into play here, where people don't want that hassle, especially entering retirement. Yeah, sure, you're making some money, but you know, in the end, you just want to have a relaxed life if you're retiring. So I think we can see a lot of these people starting to sell off these investment properties and that. So that's another thing. And again, like the younger generations, sure, they've been affording it over this last while because we've had the perfect economy and it's been really easy to access money, loans, all that, easy credit. And so it's kind of been the golden era where all these people are living in luxury. They're living in the cities, they're spending, it's nuts in Vancouver. It's like $2,500 for a tiny little place for yourself in rent every month. You'll never see that money back. So how long can people afford this? And that's my question. I think that a lot of people are going to start moving out and looking for other options just because they only have so much capital. And it's essentially, when it comes down to it, you do what you have to do. And if you're just on the very last legs of your savings and capital and you don't have much opportunity for work, well, then you start to look at other places to live where it has a lower cost of living, etc. So I think we could see a trend where a lot of people start moving out of the city and moving to these other areas. So essentially, I want to capitalize on that. That's why I bought land now, just in case that happens. And land will always lose the least amount of value in a major market correction anyways. So that's how I think it's a safe play, is buy land, sit on it, possibly build. I mean, I need somewhere to live, so I'm going to be building. But all these other people, we're just seeing huge amounts of people come from the city and just buy up 2, 3, 4 lots that, you know, it's a fraction of the cost of a lot in the city, and they can have 4 or 5 of them and just sit on it. So I think it's a no-brainer. That's some of the trends we're seeing. I haven't even got into like the pension fund crisis and the currency crisis and all of this stuff that's going to come to light, the debt bubble popping, all of that, and essentially the possibility of major deflation. So anyways, I'll leave it at that. I'm just brushing on a few main points here. And if you have more interest, go back through my videos, have a look over them, and just see what you can find. I give out a lot of information. Like I said, I'm not just pulling this out of my ass. I actually do hours of research every day. I read all kinds of articles and analyze charts and all that, and that's where I'm getting this info. So I hope you guys found value in that. Please, like I said, like the video, share it with friends and family. It's the least you could do. And I hope you guys are having a fantastic day wherever you are. I'll see you in the next one.